So if you don't recognize the scene behind me, no, I'm not in Montana. So this is where my son Spencer and I are here attending an investment manager conference, and um, so the scene is a little different. But I thought I would do this broadcast to bring you things that I think are of interest to me right now. Hi, my name is Ben Reppond. Welcome to my YouTube broadcast. Today is October 29th, 2024. I'm going to begin with, I got three pieces I want to show you, things that are of interest to me. And the first is a clip I did with Anthony Scaramucci interviewing Jim Rogers. Now, I played Jim Rogers before. Jim is at least age 80. He has been in the investment business about 6 decades, and he does this interview with Scaramucci, and Scaramucci is basically saying, tell us what you're seeing from all of your decades of experience in the market. And Jim Rogers' insights are always very helpful. When he goes back, I've read his books. It goes all the way back to his 20s. And when he finally landed in Wall Street from his education years at Yale and Oxford, he just saw that they were doing things. He didn't agree with what they were doing. They were saying buy this and buy that, and he thought this would be a terrible thing to buy. It just his instincts, and he said maybe short it, yeah. And so that he started looking at things as a contrarian from day one, thinking of things that are extremely undervalued. Maybe when nobody wants them, maybe that's the time you buy them, or things that are overvalued, maybe that's the time to short them. But Wall Street was trying to teach him, no, you just tell the investors they need to buy this and buy that. Um, so, but anyway, in the interview, he talks about that the fact that this is things are overvalued, and he uses the words, now is the time to be worried. I'm worried right now. Why? And Scaramucci says, why? Because everybody is all in, everybody's invested, and the market keeps going higher. And he said, just historically, that's the time when I get worried. Doesn't mean that the market's going to crash tomorrow. It just means it's a signal for that is the beginning of a bear market. Those are the signs. Just like when the inverse of that is true, you think, or the converse of that is true, you think, okay, now when nobody wants it, everybody is bailed out. That's the time we should probably get back in. It's when you look at things from a macro view. So I see the same thing now. Of course, I've said this before. I will say it again here, just in full disclosure. I am a tactical investor, so I follow what my method says, and I am in right now. But I am also, because I'm tactical, I am ready to get out when I get the indication to get out. And that is not today, but I personally don't think it's that far away. So if you are a buy and hold investor, then, and you want to stay with that methodology, start conditioning your nerves for a downturn. Now, it may be a correction slash downturn. It may not be a full on crash. At some point, we are going to get a full on crash. I don't know when that is, and I think Jim Rogers would be very quick to say he doesn't know when that is, but it's in our future. So if you believe in cycles. Um, so again, Jim Rogers' words are get worried. So I'll play this clip from Scaramucci and Jim Rogers. I think you'll find it helpful. So I'm passing it along because I want to give you insights from other people who I respect, and what they're saying. And this came out very recently. So take a listen to this.
And why investments, sir? What was it about your college days and the early part of your career? Why did you make the decision to go into the world of investments?
Well, Anthony, I was like a lot of other college kids. I was going to go to law school, medical school, business school. I was a confused young man. I had no clue. But I got a summer job once because I liked the guy and he liked me. I knew nothing about Wall Street. I thought stocks and bonds were the same thing. All I knew was it was in New York and something bad had happened in 1929. But I got down there and I loved it. I couldn't believe how much fun and exciting it was because I love knowing about the world. I didn't know that at the time, but I realized that I love knowing what was going on in the world. And if you could do that well on Wall Street, they would pay you. And they pay you a lot of money if you could do a good job. And my gosh, I didn't go to law school. I didn't go to business school. I didn't go to medical school. I went to Wall Street as soon as I could.
So this is am I right in saying this is about 6.5 decades of investing? Is that fair to say?
Well, it's a long time. I could add it up, maybe. I don't know if I can add that high, but it was probably 1964 or five
Yeah,
that
so
I stumbled.
60 years of investing. So what have we learned, sir? What have we learned about markets and cycles and geopolitical risk? What are some of your general thoughts about how people should think in terms of the framework of their investing ideas and philosophy?
Well, the most important and the simplest lesson is we're all human beings, and human beings, maybe they change because they use telephones, maybe they use computers or something, but basically we're all the same. I mean, we still get scared, we still get greedy, we still make the same mistakes that people have been making for 200 or 300 years in the investment world. That's the main thing. It's all happened before. And so when somebody comes into you, Anthony, and says, "Oh, it's different now," send them out of the room. It ain't ever different. It's all the same human beings making the same mistakes that we've made for centuries.
Okay, fair enough. So take us a little bit around the world. Give me your snapshot view of East Asia, China, the beautiful country that you live in, Singapore. Tell us how you feel about that part of the world, and then we'll bring ourselves over to Europe and North America.
Well, whether we like it or not, the 21st century is going to be the century of Asia. I mean, it's already happening, especially because of what's happening in China. But there are a few billion people in Asia. They're all smart, save their money, work hard, and save for the future and love investing. And if they start a successful company, many people will invest in that company. I mean, you've heard of Sony, for instance. Well, when I was a kid growing up, Japanese cars were a joke. Japanese motorcycles were a joke. Not anymore. You know, the world changed a lot, and the world learned, and the world adjusted, and that's going to continue. As far as I can see, the next few decades are going to be the decades of Asia. Yes, other places will do well, but the future is Asia.
Uh, Jim, we have thankfully avoided a global conflict. Not that there haven't been wars, and there's some wars going on right now, but we have thankfully avoided a global conflict since the Second World War. Assess that for us. Are we going to be able to continue to do that, or do you think global tensions are rising among some of the superpowers?
Well, Anthony, I read the same press you do, and I can see that there are various and sundry small wars. But if you look back in the past, that's how big wars started. There would be a small war here and a small war there, and people would ignore it. And the next thing you know, those small wars turned into big wars. Today, 1974, 1975, look terribly similar to what happened before the Second World War when all these small countries were hitting at each other. And the next thing you knew, it was out of control. Now, I hope it's not doesn't get out of control again, because if we have another war, oh my gosh. But you know as well as I do that we have a war in Ukraine right now. We have a war in various other places. So, I mean, I am not saying I am not optimistic that we're going to avoid wars, certainly in your lifetime.
Yeah, no, I feel that way. I feel that way as well. So what country and what economy are you most excited about right now?
Oh, well, I wish it were that easy. I certainly wish it were that easy. I have sold my shares in most countries in the world. I'm still long Uzbekistan, and I would hope I will buy more Uzbekistan. I still am long China, but I have sold shares in most countries in the world, Anthony, because I mean, nearly every stock market in the world has had an all-time high or near an all-time high. Now, I've been around long enough to know that when everybody is making a lot of money, somebody better look out the window and get worried. So I look out the window and I'm getting worried. Just too much happiness, too much good times, too much
Yeah.
money around the world.
Okay. Next is an interview with Mohammed El-Arian. This is done on CNN. I don't recognize the name of the person interviewing him. I think he's a financial guy from CNN. Um, and he he's picking up on something. He says he's looking at what's up the most right now. What's up that is moving up fairly decisively is gold. And so he's asking Mohammed El-Arian, of all people, to, okay, what do you think about gold? Are you a gold bug? And of course, Mohammed El-Arian, who is a little bit more on the traditional side, says, no, I'm not. And matter of fact, I don't even own any gold. Maybe I should have owned gold because it's up 30% this year. That told me that the interviewer and Dr. El-Arian both think of gold as an investment. I should buy it because it's up 30%. I'm just going to say I don't agree with looking at gold or silver as an investment. It is not an investment. So when some people talk like that, again, and with all due respect to Dr. El-Arian, people who talk like that, the my context personally isn't in that direction. And then I've also quoted Dave Ramsey on this, who has a terrible view of it. He thinks it's a horrible investment, etc. Again, he's framing it as an investment, and I frame it as it's an insurance policy. It's an insurance policy against the downside risk, basically, of the dollar, or if we have a collapsed uh, economic system, a collapsed currency, or it's worthless or worth less. That's the time when you need it. Now, I hope I never need it. I don't, by the way, I don't have gold. I have silver. So I have owned gold before, but I currently own everything I have in the precious metals is silver. And I have both collectibles and the bullion. Uh, but I have it, and I'm glad I have it. Actually, my plan is to buy more. I'll probably be buying some soon because I want to own more than I have. But I'm not going to get into that. But so anyway, he basically says, uh, if you own gold, what do you do with it when you own it? In other words, it's still an investment question. What do you do with it? If you got an ounce of gold or more than that, and you say, okay, what do I do with this? Well, you put it away. You put it away in a safe place, and you hope you never need it because that's what you do with an insurance policy. And if we get to the scenario where I'm talking about, we will be in a barter system or something like that. And you will need something to barter with when the currency, the paper currency, is no longer accepted or becomes worthless. This has happened throughout the history of mankind. Anytime that it used to be, you go all the way back to the Egyptians and then the Roman Empire and others, and the method of payment was gold or gold and silver. And but when they started going over to paper or the equivalent thereof, those all collapsed. So we haven't seen that in the U.S. So it's hard for us to wrap our minds around a barter system. And I do completely hope we don't end there. But I do feel better about my ability to survive when I think that I've got something of intrinsic value that I will need if we go to a place like that. So, but anyway, excuse me. I think you'll find it helpful to listen to Dr. El-Arian, this exchange, and where he thinks this is going. So, Take a listen.
Gold touched an all-time high on Wednesday and then just eased off. Gold is up more than 30% this year. Now, I got Mohammed Al-Arian as a warning about those gains. He says that the rise is unusual given the strong stock market, and we should take note of this. Mohammed, I never thought of you as a gold bug. I never thought of you as one of those people who sort of got all hot under the collar about gold. But when I read your article, you're suggesting that actually this is telling us something wider about what's happening in the economy structurally.
Yes, Richard, I'm not a gold bug. In fact, I don't own any gold, unfortunately, given the 30% plus gain. What's happening is that the movement in the gold price has decoupled from its economic and financial influences. There is something else going on, and what's going on has a geopolitical angle to it that is overwhelming the economics and the finance.
Why should gold, though? Because the argument, the traditional argument is that in the last bastion of disaster and catastrophe, you've got gold that you can sell. So what is happening? I understand geopolitical risk, but normally the dollar would benefit similarly at the same time. We're not seeing that. So what are people frightened of here?
So first of all, who's buying the gold?
Right.
It's foreign central banks. Foreign central banks are trying to diversify their reserves away from the dollar. It is part of a broader phenomenon where we are seeing little pipes being built around the dollar at the core of the system. Those little pipes are not just reserve diversification, they're alternative payment system, they're alternative regional arrangements, and they're alternative institutions. So led by China and some other countries, you're seeing these little pipes being built. And then we have the peculiar example of Russia. Most people thought that with massive sanctions on Russia and with Russia thrown out of the SWIFT dollar system, the economy would collapse. It hasn't. Russia has been continuing to trade. And what Russia has done, it has built a system that includes 4 or 5 other countries. That's clunky, that's inefficient, but that totally bypasses the dollar. So you have all these things coming together, Richard.
But then you take gold per se. How do you access that as an asset class, other than putting it under the bed or having ingots or central banks who have to deposit it at depository institutions? Once you've got it, what are you going to do with it?
So first, individual can access it. There are gold ETFs that allow you to access it just like you access other stocks and bonds. What do you do with it? And that was the argument. Remember, you had Warren Buffett saying it's a complete wasted asset. But yet its price keeps on going up. And that's why I'm saying what's going on here is something to pay attention to. National security apparatus should be paying attention to it because it goes beyond just market forces. It's something that speaks to people trying to decouple from a dollar-based system. And that's because people have lost trust in the ability of the US to be a responsible steward of the international system.
And a final piece I want to play for you. Again, I'm just playing what I find interesting. I see out there that I think you might be interested in. This is an interview which is done with David Lynn and Ted Oakley. Ted Oakley is in the advising business, and he uses an analogy, uses baseball as an analogy. And I'm going to put my own words to what he's saying here, is that we are in the 9th inning economically and probably in the stock market. The market has defied what people thought should happen, including some of the smartest people out there. And yet it's kept going up. The further it goes up, the further down it's going to fall. That is basically a saying from Hyman Minsky, called the Minsky moment. And he said, the greater the stability in the market, the greater the instability that follows. I call it, the further it goes up, the further down it's going to fall. We have seen this before. I don't see any fundamental reason why that's going to happen today or this month. I guess that's possible. I don't think so. But when we look out into our future, both the near term and the intermediate term, I don't see how we can avoid it. So, yes, I do think we're in the ninth inning. Do I think we're at the beginning of the ninth inning or we're in the bottom of the ninth inning with two outs? It's somewhere in that range. So, um, I would say to you, regard whatever your method of investing is, be prepared for a crash. It won't hurt you. So that doesn't mean you take all your money and put it in money market or CDs today. Maybe it's a catastrophic crash, maybe it is a pullback, correction, whatever. And if you're just all in and are going to stay in and let the market take you down, and then eventually you'll crawl back out of the hole, you've seen that before, be my guest. That's not what I prefer. So I use, as I said, I use a tactical method of investing. And when the risk starts to increase to the level where it's uncomfortable, it's starting to get uncomfortable, I get out. So I don't want to take a loss. I don't want to take a deep loss. And we've developed an AI strategy, which I will comment on in the future, but and it anticipates this much, much better than traditional methods of tactical investing. Uh, I like it very well. It's done very well during its test phase. So I won't get into that now because that's another subject. But I would say that just be prepared. Be prepared emotionally if you're a buy and hold investor and want to hang on to the end, or be prepared tactically to get out if you're a tactical investor.
You also have a chart showing the equities sector as a percentage of total household allocation. It's now at 57%. According to your chart, the last time it was this high was a dot-com bubble in 2000. What does this chart indicate to you?
Well, I have another one actually that's updated that shows if you take that it's up even higher than the 57. Just I'm talking in the last 2 weeks, and it indicates that if you look at it now, right now, what the numbers I have, the exposure to the stock market is as a percentage of financial assets for everybody that invests is the highest that I've ever seen it, and the numbers I ever have. I don't have a number this high before. And it is extraordinarily high for people over 65. For people over 60, 65, they have about 2/3 of their exposure of financial assets to the stock market. And that tells me that everybody, including that boomer group, are very, very complacent, as if nothing, they don't realize they're in a risk asset. The stock market's a risk asset. They don't realize they're in that. And I think anything that rubs the wrong way on that stuff, and you're going to have some serious problems for that group because they're just too exposed.
Okay, so usually in the past, when everybody's piled into stocks, is that a bearish signal?
It is, because what happens is they've all bought all the way and they have everybody's in. And so, the cash levels, if you look at cash levels, they're low too, and bond levels are really low. But they've decided that, nothing will happen. We have short memories. So let's just put everything in. We just keep on buying, and that's the way it goes. I mentioned the other day. It's like you're a football team and you're ready to score an extra point, and you decide to go for two, and there's only 3 seconds left. Well, that's what you're doing right now, and a lot of them are going for two, and a lot of times you don't make it and you lose the game. And I think that's where we are right now. They're assuming that everything's going to be okay, not realizing that, if it goes against you here, may not be so great.
Okay, well, thank you for watching. And if you have questions or comments, leave them in the comment section below.